So Circus, based in Latin America. Bruno Lambertini, the major partner. There are three major partners, but the major of the major. Started Argentinian in Mexico, moved to Mexico City. So it's based in Mexico City, but also in Sao Paulo in Brazil, in Buenos Aires in Argentina, in Bogota in Colombia, in Santiago in Chile, in Costa Rica, in Los Angeles, and in Spain. So we get into Spain as well. So we pick up Chile and Colombia and Costa Rica and Spain. So we're now in 30 countries. But basically digital advertising content. So it very much fits with our model, which is purely digital. We're only interested in where the growth is. As you well know, in the US in the first 6 months of last year, probably for the same for the year, digital up 20%, traditional down about 2 or 3. Overall, the industry is up about 6 to 7%. So we're going where the growth is. So that's number one. Secondly, the Holy Trinity model of first-party data driving digital advertising content, like produced by Circus, and programmatic. Thirdly, faster, better, cheaper. Sounds glib. Our new partners at Firewood, which has also become part of our content pillar, MediaMonks, largest digital agency in Silicon Valley, Lanya, and Juan Zambrano, the two principals there, talk about speed, quality, value, much far more elegant. And last but not least, a unitary structure. So not like the guy that we just saw who sold out for cash. We're looking for people to buy into our philosophy, which is about creating a new age, new era, single P&L model, the unitary model, and having, skin in the game. So all the things that we've done, we've done 11 things really since we started about 15, 16 months ago. In all 11 cases, the people who own the company have taken roughly half cash, half shares in S4. So we now have, 16 months in, we're a unicorn, dollar unicorn, not a pound unicorn, but capitalized at about $1.2 billion on the London Stock Exchange, S4.L, if anybody's interested. We're in 30 countries now, post-Circus. We have two pillars around MediaMonks in content and MightyHive in programmatic and data and analytics. And we have 2,350 people. So we've made a fast start. On a pro forma basis, our revenues are about $400 million and EBITDA around $100 million. So very strong start. We're very pleased with the progress. And I'm not aware of anybody in the advertising and marketing services industry that's gone from naught to $1 billion within just over a year. We have two pillars around content. We call our content practice because we view ourselves as being more a consultancy than an agency. So content practice around MediaMonks and programmatic practice around MightyHive. So when we picked up Datalicious in Korea, data and analytics and convergence works in London, or ProgMedia in Brazil, we've consolidated those into MightyHive. And Circus has now been consolidated into MediaMonks. So we've got these two verticals, if you like, around content and programmatic. But I just came from a meeting with a major potential client where we're doing content and we're doing programmatic, and we're preparing, as a result of that meeting, a proposal over the next few weeks, both content and programmatic. So we're increasingly pitching together as one, and eventually it will become one. Well, our organic growth is 45%, so there's very few, if anybody, in our industry growing at that rate. Can't carry on forever, but we've said publicly we want to organically grow the business, double the size of the business within 3 years. So that would imply a compound growth rate of about 30%. So we, for the first 11 months, haven't seen the December numbers yet, but I assume they'll be pretty much the same. We're talking about 45% like for like constant currency growth. So despite the fact we had currency headwinds, in fact in reported currency we're even stronger than 45%. So our situation is we have a supply constraint, we don't have a demand constraint. The holding companies have a demand constraint. They're all flat on their back or up by 2 or 3% at maximum. So growth is very hard to come when you have a traditional analog business. We have no traditional, no analog business. we're focused, as I said, fundamental principle number one of the 4 is focus on digital, because that's where the growth is. So that's where we're zeroing in. And our client list is 50% tech, the disruptors, and 50%, I guess, the disrupted FMCG, pharma, retail, and the like.
Where could sort of the advanced TV world be for your group?
Well, it sort of dominates our thinking, clearly. I mean, we're looking at all the media. I mean, if outdoor becomes more digital, as it has, it becomes more, radio becomes more, a lot of chat here about audio. I did a panel on the future of media with Lou Pascalis and Bill Koenigsberg, and one of the things that came out of that, particularly from their points of view, was the growing importance of audio and digital audio and podcasts, etc. So, the environment is changing and digital is permeating everything. But I think it's a terrible mistake to say don't distinguish between digital and analog. What it drives you then is into a much more difficult environment. What we see, in the traditional part of the business is these 10-month pitches, global pitches, which will become a feast or a fest with procurement, and it's a zero-sum game. And I said, you should short whoever wins the Disney pitch, because you had to give pricing guarantees, you had to give inflation guarantees, and there was even some suggestion of share shift, which takes us into some pretty murky territory, whether it's true or not. I mean, it creates the perception. So I think that's a zero-sum game, and we're trying to keep away from the zero-sum game and focus totally on the growth. And we do see a different attitude amongst those clients that are growing. It's a much more enlightened conversation, a much more freer conversation than, of course, if you're dealing with a client who's struggling to get 100 basis points, 1 percentage point of growth. And so very different attitudes. And that's really sort of reminiscent of what started to happen around 2010 after the financial crisis, after the subprime crisis. So that's where we're focused on. And TV is another example of legacy TV moving into the digital era, and it will be dominant. Now, on that Future of Media panel, Bill was much more gloomy about what's going to happen to traditional TV. We're talking about some parts of the TV industry being down by 40 to 45% within 18 months. That's what he said. I'm not quite so negative about it. I think there will be continued erosion, but I don't think linear TV is like newspapers. I don't think it's going to degrade at that rate. But he may be right. He's built a wonderful business with Horizon. It's the 3rd biggest media planning and buying company in the United States, and it's the last really big independent agency. So who's to gainsay what he says? To your point about organic growth, our issue and our biggest client is Google. That's what I call a whopper. We have to get some more whoppers. We have a wonderful client list: Microsoft, ServiceNow, Uber, Amazon, Facebook, TikTok, ByteDance. I mean, we've got great clients in the packaged goods area: Procter, Nestle, Mondelez, Coca-Cola, Merck, Bayer in pharmaceutical, Walgreen Boots, Best Buy in retail. So really a wonderful client list, and 50% tech, what I would call the disruptors, and 50% gets called the disrupted, the threateners, or the threatening and the threatened. So a great balance, great people, as good as I might go back to my days at Sarches or WPP, good agencies at both of those organizations, but MediaMonks and MightyHive are as good as I've seen anywhere. And I know we have a land and expand strategy rather than necessarily. We're involved in 5 big global pitches at the moment, but we prefer the land and expand approach, where we get hired. Like I just come away from a meeting where we get a project, we get in, and then we start to expand the territory that we have by virtue of performance, and we co-locate, we embed. I mentioned Firewood, which has become part of MediaMonks. It's the largest digital agency in Silicon Valley. They have about 350 people, almost 100 in Mountain View, just across the expressway from Google. And the theory is, you take on a project, show what you can do. You don't get involved in big, long, complicated theatrical pitches, and you engage and you expand, and that's where you build the relationship. So the answer to your question is conversion at scale. We have to get, I hope I come back next year. We have another session with you, or maybe at Cannes. By then, we'll have 2 or 3 whoppers. So these are clients that are worth in revenue terms more than, say, $25 or $30 million.